Ladies and gentlemen, Greg McCloskey from ForexLive.com. As the clock ticks toward the FOMC rate decision, it's time to take a look at the euro versus US dollar. What levels are in play? What would tilt the bias more to the upside? What would tilt the bias more to the downside? That's what I'm going to go through in this video. So let's get started. Technically, the technical levels have bookended the more bullish and more bearish bias for this currency pair going through the FOMC rate decision. Of course, there's a lot of things that are going to go in the witch's brew through that decision, whether it's the statement or the Fed chair comments or the dot plot or measures of GDP growth or expectations for GDP growth, inflation, and employment. All those things are going to come together at one point, and it's going to cause the price to move either higher or lower. That is, the dollar move higher or lower. When the euro versus US dollar goes lower, the dollar goes higher. When the euro versus US dollar goes higher, the dollar goes lower. So if the bias is more dovish, we would expect that the euro versus US dollar will move higher. And what we see off this hourly chart is that this green line down here represents the 200-hour moving average. Now, in trading yesterday, the price moved above that 200-hour moving average right here. And in trading here today, the price moved above that 200-hour moving average right here. And each of the time the price moved above those levels, the bias or the market turned around rather quickly and moved back to the downside. So there wasn't much momentum above the 200-hour moving average. If the price were to get back above that 200-hour moving average, to stay above that moving average, off of, again, more dovish Fed, then we could expect to see the price then go target the 200-day moving average. That's a green line right here. And it was just saw it from trading yesterday, the spike higher came after the CPI data and sort of a mystery type move. The price did briefly move above the 200-day moving average, but quickly moved to the downside. But so if we were going to go higher and get above the 200-hour moving average, we need to get above the 200-day moving average to increase the bullish bias. And then might as well add the 38.2% retracement of the move down from this high to this low. Getting above the 38.2 is always a key target. And then if we get above that level, we start to look toward the 50% retracement level. So that's a roadmap to the upside for the euro versus US dollar. That comes after a more dovish Fed, you could expect that type of price action in the currency off of that type of fundamental news. Now, on the downside, what would turn the bias more to the downside? Well, if we just simply have to look at the low price in trading here today, and maybe this low price here, you can see just like the price when the price moved above the 200-hour moving average yesterday and today, we did fall below the 100-hour moving average here, and each of the times the market moved below those levels. What happened? It ran out of steam, and the market moved back to the upside here and both here. So getting below the 100-hour moving average is like getting above the 200-hour moving average. We need to get below it and stay below it. If we're able to do that, then guess what? We look toward this other blue line right here. This other blue line represents the 100-day moving average, and if we move below that level, then we look toward this low from Friday, and again on Monday's trade near 1.0740. If we get below that level, then we look toward the low price from last week's trading at 1.023723. And if we get below that level, then it just opens the door for further downside momentum because, we would be then trading at the lowest level going back to this day right here, which is back to November 14th, and to start to look down toward this area right through here down to 1.06557. That would be the next key target where we had a nice little floor down here. At that level. You can't see it on the chart right here, but if I go like that, you can see it there. So those would be the targets on the downside for the euro versus US dollar. So with that said, that's the roadmap for going through the FOMC rate decision. Of course, there's more risk going into this decision because we really don't know what the Fed is going to say, what their bias is going to be, and what that market reaction is going to be. But we do know the technicals have defined a ceiling and a floor, or a level that if we break above, it's more bullish. If we break below, it's more bearish. And that's what you, as a trader, have to focus on. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.